Hey, good morning. This is Mayor Walensky with Driving Markets. Hope you're well. So the thing I want to speak about today is interest rates. So interest rates in New Zealand went up yesterday by 25 basis points. The New Zealand dollar came down simply because they were expecting a 50 basis point rise. I've mentioned over and over again that interest rates are likely to go up. New Zealand is the first developed economy that's increased interest rates. The next one's probably Australia, and then from there you'll have the wave going through the rest of the world. As far as the States is concerned, Jerome Powell is a far more hawkish Fed chairman than other ones have been recently, and therefore the yield on the 10-year US Treasury, which is yield is the return or the interest rate on the US Treasury in simple language, has gone up, which makes it more attractive to invest in, because yesterday it went to 1.67%, which is the highest it's been in a month, which is indicating higher interest rates. Higher interest rates is bad for the Nasdaq, bad for high tech. Anything to do with higher interest rates, the Nasdaq will go down. That's for sure. Interest rates go up, the Nasdaq, high tech stocks will go down, because of the speculative money will leave high tech and go into more solid earnings, bank accounts, interest rates, etc., low risk. Furthermore, you had yesterday, besides the high tech stocks falling, you had the banking shares in the States going up. Goldman Sachs, JP Morgan. Higher interest rates means more profit for the banks, quite simply. So that drove those individual shares higher. Going forward, it's very, very, very unstable. We're not sure where we're going at the moment. It's interesting how Tesla has become a fundamental stock across the board on the indices, and a good indicator of where markets are going. And yesterday there were more puts taken out on Tesla. Put is a option to sell the shares, so the more puts taken out than calls, which short term means the traders, investors are looking to see if Tesla will actually probably go down, or expecting Tesla to fall in the short term, not the long term, in the short term. So they were buying puts and they were selling calls, and therefore the momentum was more on the downside. That's an interesting one to watch, because there could be some significant profit taking on Tesla. Overall, the last year and a half has seen the most phenomenal rise in prices across the stock market, something that is unbelievable considering the pandemic looked like it was all doom and gloom. But once the Fed and once the central banks pumped in the hundreds of billions into the marketplace, there was only one direction the market was going to go, and that was up, because that was clear liquidity. Interest rates will pull money out of the economy and therefore make it more difficult for the stock markets to rise, and obviously make it more expensive on the individual like yourself to manage your monthly expenses, because you're going to pay more interest on your mortgage, credit cards, loans, car loans, personal loans, etc. So keep an eye out on interest rates. I would suggest that, again, if you're going to look to trade, probably look to trade on the downside rather than the upside. Take out some shorts, take out some put options. If you need any help, you can contact me. You can contact me on WhatsApp, on YouTube, on Instagram, Walensky Mayor, LinkedIn, Twitter. Where else? Just generally any type of communication you can get hold of me, that'd be great. Only trade with regulated companies. Do not trade with non-regulated companies. You lose your money. So that's it for today. This is Mayor Walensky with Driving Markets. Keep an eye on interest rates. Have a good day.